Treasury Forum is very much almost like an informal chat. We have a great lineup of high quality speakers, and one of the reasons we wanted to do that is to really bring insights about Bitcoin, about the ecosystem, to a wide audience, but definitely also with the institutional focus. And therefore, great to have you on. You're obviously a very highly respected commentator, clearly author of more than 3 books, 3 on Bitcoin, but more than that as a professor, an economist. And I think one thing that I've really found from your different talks and the books is very much the way you look at Bitcoin as an economic asset and the impact it has on society, on governments, on civilizations. And that's really, I think, if I may say so, some of the themes you've seen. And especially in the current environment we're in, with, unfortunately, I should say, geopolitical tensions around the globe, it's probably something that's kind of, in a way, become very relevant again, I would think. And I would, one observation I have is that the current environment we're in, it's an environment where Bitcoin as an asset class has really grown in size and in adoption versus the last time we had similar tensions at this kind of scale. So that's one sort of big change. We're at a different time right now. Obviously, one of your tenets is that, and actually the gold standard is a good example, right? Your latest book takes us through a bit of a theory why governments are printing money to essentially finance wars, and we're right there right now. And I'd love to maybe start with some observations you have on the environment we're in, with obviously a very big money spent going on at the moment to finance the tensions that are going on, and how you see that impacting Bitcoin.
Yeah, well, first of all, thanks for having me. Pleasure to be chatting to you. And yes, I think this is a very, very crazy time. I'm speaking here from Amman right now in Jordan, and missile sirens keep going off. Today was a particularly crazy day. I think we had more sirens going off today than pretty much any day since the beginning of the war. So,
Crazy.
yeah, I think anybody who thinks this is over or this is close to over is unfortunately very mistaken. I think if Iran's missiles are still in this quality, then this is likely to go on for a while. And the implications here, putting aside the political to try and focus on the economics and the Bitcoin aspect, I think is enormous, because I think the most important thing, a lot of people are looking at the price of oil, which I think is enormously important. But I think we may have, at least for now, maybe dodged the catastrophe there, because there seems to be agreement between Iran and the US that they're not going to target oil infrastructure, so we're not going to get the destruction of the infrastructure, which would be catastrophic, at least so far. Things could change. And with Hormuz, it's not exactly blocked anymore. Now you can just pay about 1% of the value of the oil, and Iran will let you through. So I think the idea that there is a blockage of Hormuz seems to be over, because Iran's control is so complete at this point. American aircraft carriers are very far from the Gulf. So that suggests that the oil shock might not be as severe as people had feared, because the Gulf, the Hormuz is not even in contention. There are no American military assets there. So Iran is able so far to impose its tariffs or custom duties on the oil. But the real issue, I think, and the more interesting thing and the more dangerous thing than the price of oil, is the yield on the treasuries. I think that's the big one. And so as the 10-year treasury is the most important number in the world economy, probably, the yield on the 10-year US Treasury note. Because currently it's at 4.39%. And, this is, fiat people follow this number like Bitcoiners follow the Bitcoin price, because the entire world economy depends on this number. That's the base interest rate for pretty much all of the world economy's interest rates are dependent on this. So when this goes up, everything goes up. And most importantly, of course, the cost of borrowing for the US government goes up. So the really interesting thing is, last year around this time, 11 months ago, when Trump did his tariffs announcement, he backed down from the tariffs when the yield on the 10-year hit about 4.5%, which many people, Besant, the Secretary of the Treasury, had said this is kind of our line in the sand. I think I may be incorrect, but a lot of people said 4.5% is the limit. They don't want the yield to go over that, and that's why when the market went crazy over the tariffs, they backed down when the yield curve hit that number. And so on the weekend, I tweeted something along the lines of, well, we're getting closer to that, because before the war started, the yield was 3.97, and it got up to 4.44. That was the highest that we got to. Now we're at 4.39. And when I made that tweet, it was about 4.37, and I said, it's up 39. It's up 0.39%, which is a significant, or 0.4% or something like that, which is huge. It's an enormous increase in the cost of borrowing for the U.S., but also an enormous increase in the cost of borrowing for pretty much everybody. So it puts strains on businesses, increases bankruptcies, and can cause recessions. And I thought maybe we're going to get the taco then, and the Trump always chickens out, the famous phrase. And indeed, lo and behold, Monday morning, as the yield curve hit 4.4, Trump decided, hey, we're having great negotiations with the Iranians. Everything is going great. And we're going to give them another 5 days. And he's going to, I think it quieted the markets for a while, but it's very clear that there are no positive negotiations taking place. There isn't a single intermediary who has said that they have relayed a message and that they are an intermediary. I don't think there are any real negotiations. If anything, they're speaking to each other through the media at this point. And I think the idea that they're going to arrive at any kind of agreement by Friday is completely ridiculous. This isn't stupid real estate deals where Trump just gets to, well, I went bankrupt, and then what are you going to do? I'm just going to... He can do the Eric Cartman routine of screw you guys, I'm going home, when you're discussing real estate in New York and deals about construction and things like that. But you can't do that with Iran, who has been preparing for this war for decades. They have really, really, really been waiting for this, and they have a very clear plan about what they want to do. So they're not going to, they're not a bunch of Democrats that you can bargain with easily. The gulf between the two sides is enormous, and I don't think this gets resolved this week. I don't think this gets resolved even if Trump backs down significantly from his demands. I mean, he's already backed down from regime changes, already backed down from unconditional surrender, and he has no idea where the nuclear material is, and it's pretty clear that they can't stop their missiles. So all of the war's goals are pretty much done, pretty much failed at this point. So it's not entirely clear what kind of leverage he has, because trying to escalate militarily is going to be enormously expensive. So this is really the key point. If they're going to try and escalate militarily, because right now, there are no operational U.S. military bases. They've all been practically destroyed and rendered unusable by Iran, as a report in the New York Times confirms today. And there are no aircraft carriers anywhere near the Gulf. So there's going to have to be a massive military effort to try and reverse this current outcome. If they want to take out the regime, if they want to reduce, if they want to clear the area near the Gulf, that's going to likely, I mean, if they want to really actually do it and not just spend several years bombing and killing people aimlessly, if they really actually want to achieve that as a military objective, it's going to likely require the biggest U.S. military expenditure since World War II. This isn't Afghanistan, this is not Iraq, this is probably Afghanistan and Iraq combined times 10. Iran is just a much more advanced military power, and it's a much more difficult terrain, and it's a much larger country, and it's 93 million people. It's not going to be easy. And so the bottom of the story, I don't want to get too much into the politics of it, but the bottom line is, this is going to require a lot more printing, and the yield curve is likely to go up. And I think this is going to be a massive financial catastrophe for the U.S. I don't see how they can get out of this without a significant military and geopolitical defeat, or a giant economic catastrophe, or both. I just don't see a way out. So you could get out of the geopolitical defeat, reestablish military bases in the Middle East, defeat the Iranian regime, but you have to kiss the dollar goodbye, because that's going to take an enormous amount of expenditure to do it. And you could destroy the dollar and still not do it. And you could just declare geopolitical defeat and just leave the Middle East and leave the Iranian regime and let Israel fend for itself. Um, that's the only way, essentially, to avoid economic catastrophe. So I think whatever happens, even if they, you can't really see them just backing out. It's not like Trump, and it's not like the U.S., and it's a money printer. They're just going to keep abusing it. But I think they might push their luck this time. I think the level of debt is so high, the interest rates are so high, and the amount of spending that is required to try and reverse this is so high. And I don't think Netanyahu is going to let Trump off the hook with this. There's no way that the Israelis are going to let the Americans just decide to leave. And we know Israel practically controls American politics. So it's highly unlikely that they're just going to cut their losses and stop. There's going to be a lot more printing. So far they said $200 billion is the expense that is needed. I think that's going to end up being a rounding error next to the cost. So there's going to be a lot more printing. Yields are going to rise. Energy might still get into a crisis because we might escalate and still destroy infrastructure. And I think maybe I'm getting a little too excited, but I think this really might be the big hit to the dollar. We're into dysfunctional banana republic territory in terms of debt to GDP. And with interest rates rising, it's difficult to see how they get out of this without massive devaluation. And that, for me, is the case for Bitcoin.
Yeah, that's very interesting. Thank you, Saifedean. And do you think in that case, maybe the markets have been very much the disciplinary factor, right? In terms of, as you said, the 10 years. But this scenario, they would let it loose, right? It would just go. The credit risk of the U.S. would increase enormously. The cost of funding would increase enormously, and would all be in tandem, right? That's sort of the scenario you're picturing here, which is not entirely unthinkable at the moment.
Exactly. I mean, it's getting less and less unthinkable, and it's becoming more and more probable with every passing day. And this balancing act that Trump is trying to pull off, where he's trying to convince the Iranians that he can unleash hell on them, while also trying to convince the financial markets that, we're getting close to a very great deal. It's one of these lies that you can only string along for a while. It's a self-contradicting lie that's not going to last, and I think the markets are going to punish this.
Yeah, and do you think that that's then actually going to be the catalyst for some of that structural shift into a Bitcoin standard kind of environment? It won't be immediate, but sort of maybe a hybrid or a transition period. Do you think this could be the catalyst we've been sort of waiting for in that sense?
I mean, I think so. I think the fact that gold has crashed is kind of good news for Bitcoin because, I've spoken about this a lot. I used to be a gold bug. I love gold. I think gold would be great. I'd be very happy if the world goes in a gold standard. And in my recent debate with Peter Schiff, I went into this. But I still think, as much as it would be nice to have gold come back as money, I don't think it can make it back as money. I don't think it's possible because it's just too expensive and too insecure to be able to move around in a modern digital economy. And I also think it's just too captured by the governments. The governments have all of these gold reserves in their central banks, and they don't allow you to have gold banking. So that prevents gold from ever being able to play the role of money. And I think the higher inflation of gold compared to Bitcoin is probably going to bite. That was really, I think, one of the central arguments that I made to Peter Schiff is we've had bull markets in gold and Bitcoin before, and we've had crashes in both of them. But with Bitcoin, the crashes, it's never taken more than a couple of years to get back and recover. But with gold, the 1980 bull market went up to $800, and it took 28 years. I was born around the top of the gold market, and I finished my PhD at the top of the next bull market. If I'd received gold when I was born, I would have broken even on it after finishing my PhD at 28. So that's because it's primitive monetary technology that doesn't have a difficulty adjustment, and it doesn't have a halving because it's not code. It's a rock that grows in the wild, and you have to go and collect it like a primitive human. Whereas with Bitcoin, it's digital. We have a halving. So we do get the big rise, and then we do get the liquidation. Sentiment turns. Rubini and Talib get online and start saying, "Ha, we told you Bitcoin is dead," and all these people start doing their victory laps. And then what happens? And then the halving is like the Undertaker. If you remember wrestling, where this guy always plays dead in the in the fight, and then he just wakes up and he goes and he murders the other guy. Well, that's what Bitcoin does. The halving comes along, it drops the supply by half, and then that means that even if the demand had crashed, the 50% decline in supply is going to create a bit of a bull market, and that's going to increase the price, and then more people jump in, and then the price goes up again. So we recover in a year or two or three maximum. That's as long as it's taken with Bitcoin. With gold, 28 years, the first big bull market, and then another, I think it was 12 years or so between 2011 and 2022 or 23 when we retook the high. So I think we may be entering a third one, and I said that in the debate. And since then the price has gone down from about 5,500 to about 4,500. So I think the sentiment is shifting, and I think people are getting PTSD and getting memories from the previous bear markets in gold. And again, I keep saying the number going up in gold doesn't matter as much because you don't have a monetary infrastructure that allows people to trade with gold. You don't have a gold bank. You can't just use gold. So people are always having to go in and out of gold in order to transact. You have to sell your gold, get dollars, and then transact with it. And if you want to make an international payment, you can't do it with gold. But with Bitcoin, you can. So even though Bitcoin is much smaller, it has a much larger monetary network, international, that allows for movement across the world. And that, for me, is the main advantage. So when you combine those two things, that Bitcoin allows international settlement, it's politically neutral, and it's easy to get out of war zones, it's easy to move to countries where you're not supposed to be sending it because of banking restrictions or whatever, it's just far more attractive than gold. And I think the last couple of months has been pretty rough for the gold bugs because the market is bursting exactly at the time when they would imagine that it should be the safe haven. But in reality, I think this just illustrates it's really not a safe haven asset because safe haven is not, it's not an intellectual choice. You don't choose your safe haven based on what you think is the best money theoretically. You choose it based on the physical reality that you're experiencing. You need to get out of Dubai and you have $1 million in the bank. Can you go and take those $1 million and buy physical gold and take the physical gold on the airplane? No, you cannot do that. So you're not going to be buying gold in that situation. You're going to keep the money in the bank. You're going to try and transfer it. You might be able to get it out if you buy Bitcoin with it. And that's really, I think, where Bitcoin is going to start standing out. Because, yeah, we can pump gold, we can buy more gold, but ultimately we're all buying it to sell it later on, and it's going to be speculative. But with Bitcoin, you don't need to sell it. I live on a Bitcoin standard, and not all, but most of my important transactions are carried out in Bitcoin. And that's increasingly more and more sustainable and less inconvenient because the Bitcoin liquidity market is continuing to grow. So I think this is this might be a bit of a turning point. And I think Bitcoin hasn't gone up as a result of this, but it hasn't gone down either. We are still around 70 since the beginning of the war, if I recall correctly. So I think this is, and if you look at the cycles of Bitcoin, this is usually the time when we're actually crashing. This is we're 2 years past the halving. This is usually we're getting into Max Payne territory. This is when you start getting people going on Twitter and writing long threads about how Bitcoin is a lie and I shouldn't have wasted my time and all these Bitcoin maxis are so mean. We're getting into that territory, and yet Bitcoin is here chilling at 70K. And, there's another halving coming in 2 years. So the Undertaker is going to rise. There's no escaping it.
Yeah, no, for sure. And what I've also found is that especially for people who are sort of, I guess, not very familiar with Bitcoin yet, the fact that it's like we've mined 20 million, 20 million has been mined now, right? And there's only 1 million to go. It's going to take 150 years as I'm telling you. That's sort of an insight we all aware of. But I think for sort of new people into the space, it's like a real realization, right? if there's anything, it sort of redefines the limited supply element of Bitcoin. It's like, well, gold can go on for a very long time still, and this is wow. It took 17 years to mine 20 million, and there's the rest is going to be one. And you mentioned the halving, right? So it's going to be so fast the supply rate down, and that's also combined. I'm totally with you. I think, and I think also. I'm not sure if you think that maybe that the 4-year cycle has changed for that reason as well, because if you indeed think that this is the low end, we're only down called 50% from the peak, right? So it's very different from previous cycles.
Yeah, I think so. I think we're going to see. I mean, the previous cycle, the first one after the first halving was about a 90% drawdown. The second one was about 85% drawdown. The third one was about 77%. So I was always optimistic that this one was going to be less, and I'm hopeful that for me, if it was more than 77%, that would be a problem because that would suggest that the volatility and the drawdowns are getting more severe over time. My prediction would be that it would be less than 77%, and I'm quite optimistic that we'll get that. And anything under 70% would be great because if we get something in the 60% range, then we see a trend where every time it's getting 10% less. So you can, I'm not saying it's going to continue, but it's not necessarily going to continue, but there's something indicating that there is a reduction in these drawdowns happening. But the different thing about this cycle is that the bull market was not severe. We didn't have a horizontal blow off top, which we had in the previous two times. So, for instance, if you remember in 2017, Bitcoin was about $5,000 in September, and it was already crazy mania. And then from September to December, it went from 5 to 20 roughly. And same thing happened in 2021. It went from about 30, which was crazy mania at that point, from 30 to 69 or something like that. And then it went crashing down within a space of a few months. We didn't really get that. If you look at the top was 126, and you think about the doubling, the time it took us to go from 63 to 126, it was probably at least a year or so. So that's not too extreme. And we didn't have massive drawdowns on the way down. And so the whole thing was, I think, showing that there's a lot more maturity in the market happening. And, the 77% or 85 or 95% drawdowns, they look particularly severe because you're measuring from the very top where, for a few days or a few hours of a few days, we went up a lot and then we came crashing down. So if you just take out that one particular part of it, if you take out the last few weeks of the bull market previously, then it's not that drastic of a drawdown. So if you take out the last few weeks in 2017, for instance, from 10,000 to 3,000 is a lot less drawdown from 20,000 to 3,000 or something like that. So I think this time, because we didn't have that big rise, I don't think we'll have a big crash, and I think we may have bottomed. I would expect, we'll bottom sometime, just based on historical trends, we'd probably bottom sometime between June this year and June next year, sometime in the second half of this year or the first half of next year, just looking at the previous three. But we may have already bottomed. And, I think we missed a bit of the crazy mania on the way up. It wasn't that crazy this time. It wasn't like the previous times. And I think, hopefully, we're going to miss the crazy hate a little bit on the bottom. I don't think it's going to get drastic enough that the Talibs and the Shifts and the Rubinis are going to be doing a lot of victory laps because I just don't see it crashing down. It could, it could, but whether it does or it doesn't, I still think it will recover.
You would argue that this is the environment where it would have crashed, right? People generally de-risk with this. So again, the fact it's holding up so well is a very good sign. Maybe switching gears for the last couple of minutes on Bitcoin treasuries, right? You're obviously quite very involved in the space. It's always been my view and some others long-term view that Bitcoin treasuries could become, in a way, the sort of financial ecosystem of the future, right? Some called Bitcoin banks or something of that nature. How do you view that, right? Is when you think about the Bitcoin standard and the way that Bitcoin treasuries are developing, there's obviously MicroStrategy being the 800-pound gorilla. Any observations there would be super interesting to hear.
Yeah, I'm not so sure about whether I think. I'm not familiar enough with this idea of how they could turn into banks, because it seems to me like if you wanted to have a bank, it would probably be more straightforward to just begin officially with the structure of a bank rather than trying to engineer a treasury company into a bank. However, Saylor has done that, it seems to be, and effectively he's out there issuing all kinds of financial instruments and selling them onto the market. So it's obviously working out very well for Saylor, even though the stock hasn't done very well over the last year or so. But before that, it did incredibly well, and all these other assets that they're offering are doing well, and they're being very popular. So I think there's something there. However, I'm not so sure that this is a model that can be so easily replicated and that can scale. It may be the case that it's just, in the same way that Saylor popularized the idea that there is no second best digital asset. Maybe there is no second best treasury company.
Yeah.
There's the amount of people that are going to get into the space. I mean, in a sense, it's a unique crowd because they're not buying Bitcoin, and they're not complete no-coiners who hate Bitcoin, who don't want to be involved. So you have these bit-curious, essentially, investors who don't want to buy private keys, don't want to learn what is a hash function, and they don't want to get into any of that stuff, but they'd like some of that exposure to that number go up, or they'd like to buy a financial instrument that is better than the usual bonds and instruments that they buy. And I mean, maybe strategy corners that market, and it seems to be going in that direction. I think it may be the case that the really only sustainable treasury company as a bank, maybe strategy, and then everybody else is essentially, if you want to be a treasury company, then you need to just be a treasury company in the sense of holding on to Bitcoin as your main treasury asset rather than essentially being a Bitcoin bank. I think it might be the case that these things might be better off separate. Just hold your treasury cash balance in Bitcoin and then run a financial institution on the side.
Got you. So you think that I guess gradual transformation and potentially a Bitcoin standard will be more done within the existing financial ecosystem? Is that how you view this happening over time?
Not necessarily, because I think Bitcoin's building its own alternative financial system, and we can make it really an alternative financial system because we can have final settlement without having to go through government institutions. So there will be Bitcoin native companies that will grow. There will be Bitcoin native companies, but also fiat native companies that start offering Bitcoin services. And it's not something that is easy to predict which one is going to win out or how much of each we're going to have.
Gotcha. Understood. And I don't know, maybe good sort of. I'm very curious what is the big next theme you're working on? Obviously, a fantastic writer. Don't want to get the scoop on your next book, but very curious what sort of you're thinking about as we sort of wrap up our chat.
Well, my next book, which I haven't started working on yet, but I've been meaning to write this for a long time because a lot of the people that enjoy my work, a lot of it is about Bitcoin, but a lot of it is not even about Bitcoin. It's a lot of people tell me, your book changed my life because it taught me about time preference. Okay, I made money with Bitcoin, that's nice, but more important than that was how it changed my attitude, because once you learn about the concept of time preference, it's really, really powerful. Once you start thinking about how all of your decisions are essentially a trade-off between your present self and your future self, it's like a superpower. And I know this because it transformed my life once I understood this concept, and I've seen so many of my readers tell me that the same has happened to them. So I'd like to write a self-help book that's not Bitcoin based, but that's just about the ideas of time preference and thinking about the future versus the present and how that can fix your life. So that's the next project. And then there's another couple of projects in the pipeline which I haven't really announced yet, but so this is not confirmed. These are rumors, and they may be categorically denied. But there are rumors making the rounds that there's a Bitcoin standard film coming and a gold
awesome.
standard film. Yes.
Amazing. Thank you. I think who's going to star in that? No, thank you. And I think that's about the time preference. You're absolutely right. That's a concept that's sort of very novel actually, and very much a super interesting angle to everything. So, on that note, Saifedean, really, really good to have you so much. Really appreciate your insights, and I'm sure our listeners and followers will have really enjoyed it. So, thank you again very much for joining us. Great to have you, and really look forward to seeing you again soon.
Awesome. Thank you so much for having me, King. Take care.
Take care.